Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen that ES has just, for the most part, been balancing within a range. And after yesterday's strong rejection, today is really going to be the day where we either get some follow through and the market holds up and confirms that the downside could be done, or we could actually resume and get some more weakness. So right now, there's really no clear bias in the sense that, there's not one side that's purely in control. Now, given the strength of the reversal yesterday and just the level of buying that we got yesterday, especially in the Russell, it seems like, the buy side is more in control. And, we could just balance within a range and then actually make our way back up towards that 60.75 to 63 quarter and 66.75 to 68.75. That's really the main inflection point above. So on the downside, as long as we're holding above the 44 to 46 zone, which is yesterday's intraday breakout, then the buy side can actually stay in control short term, and we could just balance within a range, consolidate yesterday's move, but still actually be setting up for eventually making a move back up towards 66.75 to 68.75. So today, we are going to keep an eye on the Russell and Nasdaq and make sure that they're holding on to the gains from yesterday. Essentially, that strong buying that came off the lows. We want to make sure that that's still intact, that whole structure remains intact, and we're not getting any deep retracements. But bigger picture, the markets are trading within a range. We're in just a even wider range now. We essentially tested the balance area that we broke out from before. That was that the entire 33 to 36 range really was support. That was the high volume node within that balance. We tested it yesterday, rejected it in a very strong way, and at this point, the expectation is for the market to balance within a range, but we'll just have to gauge the level of strength or weakness off the open to see where that balance could take place. So, holding above 51.5 tells us that buyers can still step in. Below that, we have support at 48 to 50, and really the key support below the main inflection point is 44 to 46, which is again, yesterday's intraday breakout. Now, ideally, you don't want to see the market even come down to 44 to 46. Ideally, we hold above 51.5, or worst case scenario 48 to 50, and then start balancing back up and making our way back up to the 60.75 to 63 quarter initial resistance zone. The 55.5 to 57.5 is pre-market resistance. It's essentially where the market balanced overnight. And holding below it would just tell us that, short term, there's still a little bit of weakness in this market. But, this is not really a key inflection point where we're going to look to necessarily short the market unless, we're seeing some major signs of weakness. For example, if ES goes up to 55.5 to 57.5, but the advanced decline line is quite weak, maybe around minus 700 to 1,000, that would be a really big divergence between the S&P and the internals, and then perhaps we can consider it. But if the AD line is relatively flat and the other markets are holding up okay, then 55.5 to 57.5 is not necessarily an area that we're looking to short. If we're taking a long setup at 48 to 50, or even 44 to 46, we can target a move back up to 55.5 to 57.5. But again, not the best spot to enter short because it's very much middle of range. 60.75, 63 quarter is a decent inflection point where we could still get some level of selling, but the main resistance zone on the upside, and the resistance zone that can result in a pretty decent reaction where it does make sense to short on first test, is the 66.75 to 68.75. That was the main high volume node from the balance that we developed up here before breaking down. So first test of that still has pretty high odds of attracting responsive sellers. So, on the day time frame today, The overall idea is that we're looking for the market to balance. Given the level of buying from yesterday, ideally it balances at higher prices and we hold above 48 to 50. A break below that would be a signal of weakness, but 44 to 46 is the primary inflection point, and it can still hold, and then we can still balance within a range. But overall, the idea is that we're looking for two-sided movement, giving a little bit more edge to the buy side so far. And because we're expecting two-sided movement, if you're getting a decent profit target, pretty good idea just to exit and then look for the next trade instead of just holding it, because the market may not be all that directional today. It could just be very, very two-sided. Now it can balance in a wider range, from perhaps initial support, up to initial resistance, or maybe even the 66.75, 68.75. But overall, the idea is that, it's going to be pretty balanced. We're going to consolidate yesterday's move and just kind of digest some of these recent moves that we've had in the market. So those are the main ideas heading into the open. Let's see how well the buyers can hold it up today, and we'll take it from there.